Hello learners, welcome to my channel Econvit. In this video, I will teach you about the three methods of calculation of national income accounting. So let's move to the value added method. Value added method is talking about the value additions. Value additions mean whatever raw material you have got, you have done something on that leads to the value addition. That means you have added value to that, which means this particular method talks about the production. So any name which you feel is related to production, that talks about the value added method, because it has so many names, so you must understand it is talking about the production. So production method, value added method, product method, inventory, which is dealing with the product again, net output, output is again the product, industrial origin, which means industry means production, commodity service again production. So value added method talks about the production. The formula for this is value of output minus intermediate consumption. Value of output is whatever you are producing, the price of that, the total amount of production you have done. Up from that production, surely you will be selling some bit of it, you will be keeping some bit of it with you, or maybe you will be using something with yourself or keeping for future sale. So all of that is a part of your value of output of particular year. Minus intermediate consumption. Intermediate consumption I already explained in the previous video, but you by now know it has two characteristics. Either it is meant for reselling or it will be consumed in the process of production. So which means value of output minus intermediate consumption. I would like to share about change in stock, which you must keep in mind that it is closing stock minus opening stock. Closing stock is whatever you have produced till the end of the year. So when you talk about stock, the amount you have kept for future sale, that included the opening stock as well if the closing stock is taken, because the terminology said that it is till the end of the year jitna bhi produce kiya, whatever you have produced. Opening stock talks about the initial stock of the year, which was the closing stock last year. So last year's closing becomes this year's opening, so I need to subtract this to reach to this year's production only, right? That is why closing stock and opening stock and change in stock is really important to understand. You need to subtract and reach to this year's production. Then you can easily convert it to NNPFC. Conversion is already shown in the previous video, you can please see there. This, as per me and my preference, is this particular format. You should go for value added method, because the question, sometimes the value added method is a lengthy question. The theoretical part of the question is given generally, it is in paragraph, so you can divide your just read the question and do it as per this method. Surely you need not to read it again and again. So whatever is the value output or whatever sales is being to firms, you can straight away write to the same amount as intermediate consumption. The way I've mentioned here, sales to B, or in the B's firm B's column I've written sales from A. So whatever a firm has sold to another firm, for the other firm that becomes the intermediate consumption. So by this you will easily be able to calculate GDP-MP or the value added of each firm, and when you will add for each firm you will reach to the GDP-MP, that is for the economy. Now the next method I am teaching is the expenditure method. Expenditure deals with whatever amount you are spending, which means जो हमने अभी अभी circle of law of income पढ़ा था, you said there are 4 people: households, producers, government and rest of the world. So expenditure methods it's talking about to add all the expenditures. C is for households, I is investment or capital formation, which means by the producers, G is by the government, X minus M is exports minus imports, which means rest of the world. So I am talking about the same thing which we discussed in circular flow of income. I will take this equation ahead in the next chapter as well. So C is private final consumption expenditure or households final consumption expenditure. I is investment or capital formation. G, government final consumption expenditure, which means anything which is produced or which is taken by the government, purchased by the government with specially the aim of social welfare. Exports minus imports are net exports. Let's talk about each thing separately. So, consumption expenditure, whatever is being consumed by the households is consumption expenditure. I is investment or gross domestic capital formation. Please understand this, this is very important. Gross domestic capital formation is equals to gross fixed capital formation plus inventory investment. So if the word fixed is written, you are supposed to add change in stock. Fixed is not written, you are not supposed to add change in stock. First thing. Second, sometimes gross fixed capital formation or gross fixed domestic capital formation has three components, and the components are given sometimes. That is business fixed investment, residential construction investment, and public investment. Business fixed investment is the investment by the business companies. Residential construction investment is the houses expenditure, houses investment. Public investment is by the government. You must take care that all these values should be in the gross values in order to reach to GDP-MP. The moment it is given net capital formation or net fixed capital formation or any of the word in net is given, that leads to that it is a part of NDP-MP and not GDP-MP, because using this method you will get GDP-MP. So if I or investment or capital formation is in net, you will reach to NDP-MP. So please take care of that. Next, methods of calculation में अब हम third method पे आते हैं, income method. Income method is add all the factor incomes. You by now know what is factor income, rent, wage, interest and profit. Just names are different. So in order to reach to the domestic income, I am adding all the factor incomes. So this method will take you to NDP-FC, that is domestic income. Rest of the two methods were taking you to GDP-MP. So rent, wage, interest and profit. NDP-FC is equals to COE plus OS plus MI. This is same rent, wage, interest and profit, just the terms are different. For example, wages. Wages are specifically for given by the employers to the employee. So sometimes wages are not called as wages. A doctor might not get a wage, a teacher might not get a wage, they'll get a salary. So I have just named it compensation of employees, which means whatever you are giving to the employees, maybe in cash or in kind, maybe by contributing to social security schemes, SSS, right? So compensation of employees. Operating surplus is whatever you are getting after your income from operations, which means in which your business is, that is income from operations. So rent, royalty and interest on loan for productive purposes added only, not for personal consumption loan. And the third is profit. You must understand about profit and its components there are three main components of profit: corporate tax, dividend, and retained earnings. Corporate tax is the tax by the corporates to the government. Profit tax is also corporate tax, business tax is also that. Dividend or distributed profit, retained earnings or undistributed profit, or savings of private sector or reserves and surplus. All of that are the part of profit. Sometimes profit directly is given, sometimes the parts are given, and many a times profit is also given and 2-3 parts are also given. For example, profit given, corporate tax is given when you are doing a question. So just take profit, don't take the components if profit is given. But take care, sometimes it is given profit after tax. You just need profit because it is after tax, which means tax has been deducted. You add the tax to reach to profit. So our third component of NDPFC is mixed income, that is mixed income of self-employed. Sometimes you cannot bifurcate the income as rent, interest and profit. There comes the mixed income. Add all of that, you will reach to NDPFC. NDPFC is the domestic income, then subtract. Now you understand whatever is included. You must know whatever are not included in the national income. So SWIFT, that it easy to remember. These are the precautions as well. So whenever you are asked about the precautions, remember this and convert those precautions as per the method. For example, value added method, you will write second hand goods income and the production of second hand goods are not recorded. Income method में लिखना होगा same, तो the income on second hand goods are not recorded, right? So second hand goods, windfall gains are all those in which there is nothing productive is happening. Illegal income, obviously the income of thieves are not recorded in the national income. Financial transactions are all those transactions like investment or FIIs, like purchase of shares. All those financial transactions are not recorded. Remember, the commission of the broker will be recorded because broker का work है वो. It's the work of the broker to take commission and issue shares or something like that. So brokerage is included, but the financial transactions, purchase and sale of shares are not included. Transfer income, surely not included. So do you think income calculation is the correct method to show welfare of the country? You are calculating national income. Do you think it is showing the welfare? So the answer is no. You must understand it step by step. So I'll just explain you using this table, that national income at current prices and national income at constant prices. So there are 2 years. Let us calculate the current price and constant price. The constant price, which means I am not taking price into consideration, which means it talks about the real income. Matlab, you are taking only the base year prices, same prices but quantity of different years. Current prices means current year price and current year quantity. So when you calculate, let's say 2019, the price of commodity is 10, quantity 15, nominal income came by 10 into 15, which is 150. 2020, this year price was 20, quantity 15, the same quantity, and nominal income 20 into 15, which is equal to 300. So real national income क्या हुई when you are taking only the base year prices. Base year has already happened, that is 2019. So 15 into 10 and 2020 में quantity is 15, so 15 into 10, which means real income is equal in both the years and nominal income is increasing. This tells you that national income is not a correct indicator of welfare. So you can find the GDP deflator in order to check that how much the GDP has deflated or reduced, or what is the price index. There are other methods also to say that it is not showing the welfare of the country. There are other points as well. So there are other methods These are distribution of GDP. Distribution of GDP means that how much your GDP is contributing, how much, what is the distribution, is there any inequality of income? So if your inequality of income is higher and there is a huge gap between rich and poor, the GDP is not telling you about that. GDP is not telling you about the welfare, right? So distribution of GDP is majorly talking about the inequalities, but you do not know it through the calculation of national income or GDP. So welfare is not rising, but the GDP is rising. Next, change in prices. I just explained you that it is not a reliable index to measure economic welfare. It is, the national income might rise due to only rise in price. And this question also came in the boards one time, that it asked about that how change in prices affect the GDP or not. So you must understand, it was specifically asking about the numerical example you can give, which I just told you. Next is non-monetary exchanges. So non-monetary exchanges are those, whatever, I mean, activities which we are not contributing because either we cannot evaluate them or we do not give much importance to them, we cannot quantify them into money. For example, a housewife working for the family, a kitchen garden. A kitchen garden cannot be included because it cannot be evaluated. It is happening, it is producing, but it is not being able to get added in the national income. It is increasing the welfare but not added in the national income. Then externalities. Externalities are benefits of or harms which is happening without me doing anything, which means I haven't done anything good or bad, but still I'm getting affected. For example, I have a truck business and the roads are nice. That's a positive externality. Or let's say I have a fishery and there is an upstream factory. So the factory is disposing of all the waste in the stream. Stream is getting polluted and the fishes are dying. So my fisheries business is getting affected. That's a negative externality. Similarly, environmental pollution is doing harm, which is not contributed in the national income. We do not take that into account. And positive externality may be increase in the parks, that is contributing towards more of positive externality in which payments are not there. If I'm going to a park, I'm not paying anything. So externalities should be taken care of in the national income, but they are not because they are increasing or reducing the welfare. Rate of population growth. So if rate of population is higher than the growth rate, which means your per capita availability of goods will decrease. The amount of goods producing in the economy is the GDP, but population is higher than that. So it might reduce the welfare of the country, but it is not accountable in the GDP. So which means we must take care of all the points while comparing GDP and welfare. Also, one point out of this that is now generally taken care of, that is the negative externality of pollution. For that, we are coming up with the concept of green GNP, which means that you measure the national income and adjust output as per the depletion of natural resources or the degradation of the environment. But it is difficult to find that, the quantify that the pollution, how much pollution you have made, right? That completes our first unit of macroeconomics, that is national measurement of national income. I hope you liked this video. I hope you understood something. In case you did not, please comment. In case you want to learn something, please comment and like, share and subscribe my video. Thank you so much.